Good afternoon, welcome to Market Wrap number 164. Stuart Williamson here at the helm. This week we're talking about rate cuts and the state of the UK economy. Nationwide cuts mortgage rates and starts a mini rate war, according to the press. Cut its rates on July 28th, according to the FT advisor, and it has started a rate war, argues Luca Mortgages director Ben Tadd. On the back of the Nationwide, following other major lenders such as HSBC in cutting rates, Tadd said that this has created a rate war. Might not be a big rate war, but it's a rate war all the same. What's a rate war? As well, they ought to start competing to try and get the best deals out there. Tadd indicates the news was a positive development, saying yet another big player in the mortgage market slashing their rates is only a good thing for existing homeowners and prospective first-time buyers alike. The mortgage experts Daryl Doffer outlined that Nationwide reduced fixed rates by up to 0.35% and tracker rates by 0.2% on switch and additional borrowing rates. So that's great news. When they compete, it's good for us as borrowers. And it's not a big thing, but it's a start. That's what it's about. Other people, Peak Mortgages and Protection Brand, said, this is Risk Schofield, said that lenders are pricing some pretty pessimistic worst case scenarios over the past few months. But after some significantly better than expected inflation numbers, lenders are not under so much pressure to do so anymore. Positivity was also expressed by R3 Mortgages founder and director Riz Malik, who stated, despite the anticipated base rate hike, which is next week, up to 5.75%, I think, there seems to be a newfound tranquility in the mortgage rate landscape. But Malik also posed the question, how much of this calm is seasonal versus an indication of improving market conditions? I don't know the answer to that because I'm not really that au fait with mortgages, but it's a good, interesting question. Lodestone Mortgages and Protection Director Craig Fish indicated it was too early to comprehensively answer this question, as he cautioned that the Monetary Policy Committee is certain to increase the base rate this week, and less than a week later inflation data has been released. So it is going to go up this week, we're going to see that for sure. Rebus Financial Services co-founder Lee Gathermole shared this concern, stating that with inflation dropping more than anticipated, there'll only be marginal increase in the Bank of England base rate. We've seen that again today. There's been talk about cost of foodstuffs, drinks and so on falling in the UK from an inflation perspective. But the point is that the increases that go in now have already been priced into the market, and you shouldn't have too much to worry about going forward. It could well be that we're reaching the top. They're priced in, and these new released products have got those priced in as well. It's unlikely that there'll be yet another knee-jerk reaction where people start pulling all their mortgage offers again. Homebuyer Club podcast host, you should listen to, it's very good, it's called the Homebuyer Club podcast, Joe Thompson warned, in a market full of negativity, this is a brilliant boost. Does this signify the start of rate reductions overall? No, but I feel as though it will be seen as a positive for a lot of buyers and remortgaging clients needing a mortgage. Simon Gammon from Knight Frank Finance said this could be a turning point in mortgage rates. Inflation now looks to be genuinely coming down, and providing that continues, we should see a steadily improving picture for mortgage rates through the second half of 2023. And that, they're a big sort of player. They do a lot of research. They're very well respected. At the same time, nearly 70% of respondents to The Economist's magazine expect the Bank of England to raise the rate by 25% to 5.25. That's 42 out of 62 said that on the 3rd of August. This will be coming out slightly after that because I'm going away for a day, so I apologise for that. But I believe it could well go up to 5.5%. Most of the economists do expect another rise to 5.5% at least at the next tightening, the next meeting. And it may well go further to 5.75, although now virtually all of the economists saying that that's not the case. If you compare that 5.5% to what most indicators were showing a fortnight ago of 6.5%, that's very good. He goes on to say, Mr. Cameron does, in the best case scenario, one which you see multiple positive sets of inflation figures over the coming months, it's possible that mortgage rates are beginning to see the very slow glide back to the 3s and 4s we saw 3 weeks ago, rather than the 5s and 6s we have today. The leading indicators look good, with one fairly big caveat. The S&P Global CIPS Flash Purchasing Managers Index. This registered a considerable slowdown in business activity growth across the UK private sector economy during July. If you have a look at the chart here, you'll see that. The latest rise in output levels was the weakest for 6 months, largely due to the flatlining of new orders and sharply reduced backlogs of work. In addition, manufacturers reported the biggest improvement in suppliers' delivery times since the index began in 1992. So these logistical problems that everyone's been having seem to be going now. It's a normalization. And so manufacturers are starting to cut output, which is not that great. Across the UK private sector as a whole, the latest round of inflation in terms of prices charged was the slowest for nearly 2.5 years. Having said that, strong wage pressures, he says, resulted in another marked increase in input costs across the service economy, which is not great. If stuff going out is not getting more expensive, but stuff going in is getting more expensive, that's going to be passed on in higher prices and higher inflation. Nevertheless, he says, the survey data signal further potentially marked falls in consumer price inflation in the months ahead. Chris Williamson from no relation, chief business economist at the S&P Global Market Intelligence, said the UK economy is showing a brighter outlook, which is important, as a backdrop to the UK property market. If the economy is doing well, the property market will do well. The UK is out for a sluggish year, but the outlook is unquestionably brighter than it was just a month ago. The IMF expects economic growth to hit 0.4% this year, a substantial slowdown from the 4.1% it said in 2022, but markedly better than the projections of projected recession that was made at the start of this year. He goes on to say it's not just the UK for which some of the worst case scenarios might not come to pass. The global economy will expand at 3% this year, down from 3.5% last year, the IMF said in its World Economic Outlook. That's a 0.2% upgrade from its April projection. The group also upgraded its outlook for the US economy by 0.2 percentage points to an annual growth rate of 1.8%. The COVID-19 health crisis is officially over. Supply chain disruptions have returned to pre-pandemic levels. Economic activity in the first quarter of the year has proved resilient. Energy and food prices have come down sharply from the war-induced peaks, allowing global inflation pressures to ease faster than expected. Financial instability following the March banking turmoil is also contained. Pierre-Olivier Gourinchas, the IMF Director of Research, says the signs of progress are undeniable. The balance of risks remain tilted to the downside, however. Interest rates are now in contractionary territory, weighing on activity, slowing the growth of credit to the non-financial sector, increasing household and firms' interest payments, and putting pressure on real estate markets. So this is a great quote from the IMF. Core inflation, he says, meanwhile remains well above target, but is declining gradually. Nevertheless, stronger growth and lower inflation than expected, suggesting that the global economy is heading in the right direction. So it's looking more positive. Well done. We've seen it through. I think hopefully we're out the other side. Let's not panicking about interest rates. But a question I would ask you, is there any point trying to make money from property? Is your future actually written in the stars? Sunday Times 35 richest people under 35 in the UK report is just out. Okay, now most of those people did not inherit their wealth. Half of them were state educated, but all are multimillionaires. Okay, so the richest people in the UK some amazing people. The guy who, the Duke of Grosvenor, who owns most of London, wealthiest of all. But the star signs are important. Leo has got 7 multimillionaires, Aquarius 4, Gemini 4, Aries 3, Cancer 3, Sagittarius 3, Taurus 3, and after that it slips away. So you've got to be no star signs if you're going to be one of the super wealthy people building their businesses out there. So unless you're in that, it may not be worth carrying on. At the same time, if you read a book called The Outliers, they analyse how people who are successful in sports teams were all born in the first 6 months of the year, because they are the biggest in their classes, so do best. So how does that impact your children? Of these 35 people, the majority made millions on their own, but 9 were born into money. Those who inherited wealth are worth the far most valuable. 33 out of 38 individuals on the list built their fortunes themselves, a combined 5.8 billion. The other 5 who at least some of their money to inheritance made 13 billion. 4 of the 35 under 35 were born outside of the UK. The others mostly came from London or Worcestershire. How about that? Half attended state schools and a third didn't go on to further education. The people from Worcestershire all came from the South Bromsgrove High School. Okay, so if you're not a Leo, an Aquarius or a Gemini, and you don't come from London or Worcester, perhaps it's going to be a pretty hard road to make money. So that's it. The economic outlook is improving, mortgage rates are coming down, there's a mini rate war going on. I know in the short term it doesn't feel like that, it feels still pretty grim, but there is light on the horizon. So let's make light, have some fun, buy some property. The bigger picture is longer term, it will do very well. That's the market wrap for 164, Stuart Williamson. Please do like, share, and that sort of stuff. Do go to the different websites I've mentioned. The Mortgage Shop is a great a little podcast rather. Have a look at the 35 wealthiest people under 35. Some great singers in there. And it's Harry Kane. Can you believe it? Thanks very much. Cheerio.